Thank you, Jari. I'm very happy to be here, and I think this is great to have us in the Nordic help out. I'm going to come more in depth to what we're doing. I'm Susanne Hannestad, based in Oslo, help fintechs to scale. So that is in general. And when I'm talking in Nordics, I say that the 4 Nordics, Iceland plus the 3 the Baltic states. That's 35 million people. Not much. It's just a little bit larger than Shanghai city, so that gives us size. But we come about our weight, which is the great thing to it. So I'm combining a little bit on the financial inclusion and the fintech. So this is the backbone. We are doing quite a lot in fintech because we are so advanced. We have close to cashless, and we are good on technology. We have good, transparent, smart people that can make fantastic products. So we are starting at a high level because the infrastructure here in the Nordics is so great. And some of that learning can be helped to other places, but you always have to adapt wherever you go with your technology and product. So this is the backbone. And by the way, MasterCard, they are doing quite a lot on financial inclusion. They have a center for inclusive growth, which is one of their 4 pillars. This is for-profit part. And then they have a foundation, which is all the kind of leftover money that they're earning on the for-profit, they are putting into a foundation. And there they're working with the Soros, the Gates, the Rockefeller, and all, I would say, family houses around to help out with financial inclusion. So they're big force. So why does financial inclusion matter? Jari was telling a little bit about it. There's nearly 2 billion, 1.7. So it's getting better, but there's a lot to be done to it. So even though it's access, do they use it? That's another challenge. And then when it comes to insurance, then we have 3 billion. And then when it comes to cash, informal, 80% is using cash as a payment. We know it's costly. We know it's unsecure, it's easy to steal. So it's a lot of things around the cash that is not optimal. And then, we from the Nordic, we have a transparent society, we are open, we are providing quite a lot of money to emerging market through our governments. We have fantastic technology, we're good people, we like to do good and make a good business wherever do it. So having a collaboration between government, private, tech companies and so forth, and have all those stakeholders work together. We arranged our first financial inclusion summit in Oslo last year. So a lot of the findings and the learnings from that we're going to bring forward here to this event. And we also made a report, and all the things you can find on the financialinclusion.com. There's a lot of reports and use cases and so forth. Yeah, so here you see a little bit about that we had quite a lot of the big stakeholders. So we had very international, so it was more than 30 countries coming in. I'm going to come back to the fintechs that was there from the Nordics, doing a great job at the event. And then it helps to bring in the Crown Prince. Royalty matters, they open doors. And we also try to invite Queen Maxima. She's the ambassador for financial inclusion in the UN. So she's doing a great job. And she's a banker by education and practice before she married King. So we work with several parties. CGAP is one that is underneath World Bank, and World Bank is doing a lot of stats and making sure and so forth. And CGAP, they have put together a nice slide here saying that access is there. From 2011 and until, in this case, 2017, quite has happened. So it's more and more and more access. And when we say emerging market, we say Africa, we say Southeast Asia, and also Latin America. Mexico is on the watch list in World Bank because they have so much corruption, so much informal way of doing their business, and they're not able to have, so it's a lot of unbanked in a quite, I would say, mature society that Mexico is, but still they're struggling with that. And then we see that the challenge is the access there, but is it being used? So here we have a lot of the same countries, and it's a lot of dormancy. So if you have 1.7 billion that is unbanked, no bank account, then you have close to 3.4 billion that is not using formal. So it's a huge, that's more or less half the society in the world. So it's a huge, I would say, grey and black numbers in that sense. To the cost of cash, using South Africa as an example, they're saying that indirect cost is 60% of the whole cash cost, which is huge. A lot of informal. If they have of the low income earners, they're using 4% versus when you're part of the formal, it's 1.1 or 1%. So it's a 1 to 4 difference in cost using a formal versus an informal when you're doing payments. Huge difference. Here's the trophy. In the Nordics, we have over 50 companies that are doing concrete solutions working in Africa, Southeast Asia, and Latin America. And all these players here, they were present at our Financial Inclusion Summit last year, providing their information, talking about this information. All the big players, all relevant banks throughout the world. I'm going to come back to Equity Bank in Kenya. The CEO, which is you probably met him or seen him. He's fantastic to present, and starting from scratch, taking the bank up and now making sure that it's more formal, also less unbanked there. I'm going to come back to some of these companies later on. So here we have 3 of them. We did a lot of media or filming for that event. So if you go to financialinclusion.com, you see use cases, filming. These 3 guys is just summing up what they thought about having a network, having an arena to meet with the big guys, potential customers, potential partners, investors, impact investors, understanding that investing in the emerging market is profitable. You just need to spend a little bit more time before you look at the profitability on it. So we have Erasmus from Arise, that's a Danish one, and we have Jens Glasse, Blockbonds. They are now in, I believe, 11 countries in Africa and in the Southeast Asia, and continuing. And then we have Madeleine from Red Flash doing a lot on the mobile side. So 3 good cases. And then we made a report. We interviewed quite a lot of the fintechs that was present prior to the event, so we had everything arranged before that. We did the deep dive together with Mix, McKinsey, MasterCard, World Bank, World Economic Forum, to see what's happening and get the facts up. So that's another report I suggest you to read, which you also find on the financialinclusion.com. I'm going to take some of the insights from this report now. What we saw that how to create good financial inclusion when you're making products or technology that is going to be in the emerging market. Design-led thinking. In the Nordic, we are great at that. Finland, Sweden, the 3 Baltic states, Iceland, Norway, Denmark, we are all very good at making it user-friendly, and everything is design-led when you're making products. And then you adjust very much in the countries or the regions that you are. So it's user-friendly on the basis of those who are using it, whether it's a consumer. And another thing is create more flexibility in the regulatory framework. Europe is very good at having, as you say, we are formal standard things, and that's a lead we're having compared to the other continents in the world. Singapore is coming here, Hong Kong is coming here, Japan is coming here to learn how the Europe is doing. And when Europe or EU is coming out with new regulation, look who's the first one to adapt. Yes, the Nordics. Finns are usually very quick, the Norwegians are very quick to adapt, making sure that they take the latest and figure out how can we take this forward. So it's a keenness to technology, but it also has to be very, of course, close to the customer. And then identify ways to enable access that thrive and drive users. Back to the, we have access with the unbanked or the banked in emerging market, but the usage of the bank account and the formal way is not optimal. So there's a lot to be done there. Then we have pursue, of course, share goals and seek collective gains, and then inspire the digital drift. There are some requirements, which is hopefully obvious to all of us, but we can state it: cost, reduce the cost, reduce complexity, make it as convenient as possible, and customize to the various areas you're in, and then cultural elements. So it has to be adapted wherever. You can't just take a product from here in Finland or in Norway and then just implement it wherever in Africa, Southeast Asia, or Latin. You have to adapt it. So it's a good. You have to bridge it. I'm going to come a little bit deeper on some of these things. We interviewed, and then various, and then why does it matter? Not just economies, but it's about the people. How can we help this lady sell her vegetables and fruits and so forth in the most convenient way? And then Giselle, she's in Huawei. She's living in Sweden, but she's originally coming from Congo. And she sees how can we bridge the Western ways of doing it and combine it with the way they're doing in Congo and other countries. And she says people assume that just the way things are, but I've experienced the security and the speed of real-time payments. So that's what you're saying. How can we help them to adapt with such a solution, like in Congo? But you have to get into the people and make sure they. Another thing is Aion, part of the report, saying that often the informal sector is as much as 85%, as Jari was saying. And this is the key to understand how can you adapt into that and tap into it and make sure you help them. And then how do we factor in to our planning? Of course, you have to discuss, you have to be close, you have to figure out how you can do that. And another one, James Mange, he's the CEO of Equity Bank, based in Kenya, but the bank is in 7 countries around Kenya. And he said, and they were rock bottom on profitability when he came in, and he was wondering how can I turn this bank out, and he's not starting with the affluent, he's starting with the unbanked. How can he help the unbanked in Kenya and the countries around to be part of the as a customer there, take risk and so forth, and meet the requirements in the rural area. You were mentioning lending. Lending is a one to invest in business and then take it forward. So he said it's not a simple matter when you're signing up with the agents. You have to kind of get them into the the branding of the bank and the educations and so forth, and make sure that they are communicating the bank's wishes out to the customer. So it's a lot of education that needs to be done with the people that you want to reach out to, whether it's your agents or the customers that you're reaching out to. Another thing is investments. Here in Finland you have Finfund, Norway is having Nordic, Sweden is having SIDA. These are the governmental bodies that are investing in emerging market, predominantly Africa. Nordic, they have also now invested in a big investment in Bangladesh with a bank there to help make sure that Bangladesh take away some of the financial inclusion to it. And then the question is it profitable? Is it risky? How do you dare to invest in all these places? If you take Africa, it's the most growing continent in the world. They are young, they are happy, they are eager to take it further. Yes, there are differences between the African countries, but they need a little bit help to take it further. If you help the mother to do business, food on the table, education to the children, a little bit the black and white here. The guy, the man, the husband comes back from the drinking and then joins the family, so then they can thrive going forward. I'll take it in a black and white thing. And then you have microfinance. This company, they started 11, 12 years ago. There was a affluent Norwegian. He wanted to help out. He's very into social entrepreneur and also financial inclusion. So he said we should put some money and then help out with microfinance. And as Arthur, who is now the managing director for it, doing microfinance is costly. It takes time and to be out and making sure that everyone is getting a bucket to start a business and do whatever. If he can get some help from the fintechs that are here in the Nordics, and then combine what the mission they are doing with the technology that so many of the companies that I've showed you, then there will be a win-win situation for all parties. Taking us back to the Nordic, so we are also Fintechable is a company that Fintech Mundi is founded and work together. So we launched a global fintech index, and then we are ranking the countries as a start, and then also 200 countries in the world. And now we're filling in with all the fintechs that we are aware of, and then of course fintechs can fill in. So then we can kind of compare on a factual basis. There's a lot of, I wouldn't say fake news, but there's not our improper information around the fintechs. So, no surprise that the US has been lagging and is still lagging when it comes to fintech, but they are huge. They move fast once they see something that is working. So they are there, and UK has been the leading with the London on fintech side. To my pleasure, we have Nordic very present. Lithuania. You would think that a small country like Lithuania, how can they come above their weight together with the big guys? They have been very, very smart. The government has put on the sandboxes. They make sure that talented people, they can easily get into Lithuania and stay there. Many international companies are staying, fintech companies, they are staying, at least having a branch in Vilnius because it's so thriving. Very good engineer, so there are a lot of things. That's the reason why they are very high. And another thing I thought was quite cool is they're number one on the Wi-Fi speed. So they have turned up the speed on the Wi-Fi because, as you said, Jari, internet is a key thing. And you would think that the US is big on Wi-Fi. They are on the 20th place. So that's not what's driving them to become the first one. Sweden, no surprise there. Estonia, a little bit surprising. But again, the Baltics, they are doing quite a lot when it comes to making sure that they attract talents and get back the people that emigrated from the Baltics. The UK is doing quite a lot of scale-ups, but if you take a circle around the Nordic here, that gives roughly 16% of the scale-ups, meaning we are number 2 in Europe creating companies and make them thrive and make them profitable and building up. So it's technology, people, leadership, marketing, commercialization, all those things. And then there's a lot of money invested in standard fintech or financial technology. Klarna is absolutely taking the lead, so it's outrageous numbers that they have invested. So, and this is from last May, so it's probably much higher now. And then this is based on the interview that we do with the fintechs, banks, and so forth. And the confidence in the Nordic is very high. So we a little bit adjusted since 2018, but 57% of us think that the Nordic is a global leading hub when it comes to fintech. And some of the challenges, fintech in general, but I assume that is replicable to fintechs that is working with financial inclusion, is that funding is a key thing to scale and get out there. And then eventually you have to look at the bottom line to make sure that you're sustainable also financially in what you're doing. Some sources of inspiration. This is facts you will find in the report. With a laser focus on customer wants, needs, and so forth, what can be done to outcompete informal sector? One question. With a clear policy and a program of bold new regulation, what can be done to swing balance in favor of the alternative options that on the surface may look too compelling? And third one, what is the opportunity for unusual, authentic, stripped-back products that can use creativity to break previous norms and conventions? What scope is there for strong private-public commercial partnership that can manage to combine strong social purpose with a commitment to competitive and free trade? And the last one, are we ready to accept that a successful war against cash cannot be purely market-driven and needs to be complemented by a holistic program of rules, incentives, and cross-industry collaboration? And if you look at the Nordics, we have a few cases that have tried to solve these 5 questions. Spotify is not necessarily fintech, but they have done quite a lot to outcompete privacy. And then you have Estonia with redefining the regulations, so they have outcompeted the corporations. And then for cash, iSettle, they are very strong in the Mexico and Brazil. So the SMEs, in particular in the Mexico, is now becoming more and more digital because iSettle has come in and they work with the government, they work with the infrastructure, and they incentivize for SMEs to do it digitally. And once you have it digitally, the state is of course happy to get more taxes because then you're more transparent. So then you're paying back to society in that sense as well. So it's a good circle for the whole. It's a little bit educational in the beginning to make sure that they use the digital thing. And of course, when you have so high corruption that you have in Mexico, you have to deal with some of these things to sort it out. And then we have the Nordic model of self-awareness. So we are very collaborative in the Nordics. We are small countries, and we have realized that if we are quick to adapt to and flexibility, open, and then we do it for the good. So then you can have both competition, collaborations, and making sure that the result is so much better than if you have done it individually. And then for the hard cash, Norway is a long country. Iceland is a very remote country and spread with people. So we realized in the 90s it's much better that we have a digital cash system with the merchants having terminals and the cards being used there. So then you don't have to go in and take out ATMs and so forth. So this was done in the 90s, and now we are close to cashless in all the countries in the Nordic. After the summit, this big equity bank in Kenya are now working with Bright. Bright is having solar cells that is using a mobile phone, also the solar cell to attract electricity, using a mobile phone to have so that they can pay for their usage or pay for the lamp that they're using. And these lamps, they are in the rural area. And Ajabanga, James Mage in Kenya, he realized that this is a super duper thing. So this is a win-win situation for a collaborations between a big bank and a small fintech coming from the Nordics. You all know these 17 goals. 11 of them are related to financial inclusion. So just by contributing to financial inclusion, we are contributing to the sustainable goals in the world. And I think that's awesome for us to do. So as a conclusion, kind of a Nordic fintech manifesto, we have a lot of confidence in ourselves, to what we are doing. Fintechs here need a little bit help from investors to invest in them, so then they can continue doing financial inclusion products. And then more cooperation with the banks, whether it's here or other. The equity bank in Kenya is a super duper way that you can do collaboration. And we think collaboration is the new innovation. Thank you.